Everybody knows money talks, but what they don't know is just how sexy it sounds when it does. Tackle Trading's Forex report will really turn you on.
I think it's absolutely vital that everybody in society, regardless of where we're from, that we understand what the foreign currency market is all about, that we understand what a free-floating currency is, that we understand what a fiat currency is, that we understand that these currencies come and go, and when they do come and go, it's not the governments, and it's not the central banks, and it's not the exchanges or the Wall Street tycoons that get hit by these types of scenarios. It's really the consumers that get hit by these types of changes to the free-floating fiat currency models that have been dominant over the last 100 years. Well, prior to that, you had pegged currencies. You had currencies that were pegged to commodities like gold and silver. And what a fiat currency is a free-floated currency where it's not pegged against a commodity, it's pegged against another currency, which go up and down. And fiat currencies come and go, ladies and gentlemen. They don't just come here and maintain status. They come and go because they print so much money that they hyperinflate, and when they hyperinflate, a lot of times nations will make a decision. Well, we can't fix the problem, so let's kill the problem. And the problem is the value of their currency. And so what they do is they kill that currency and replace it with a new currency. And that's happened more times than we would care to admit over the last 100 years. And it really kind of started with Germany back in 1919, 1920, after Versailles, the Versailles Treaty at the end of World War I. You had the German government, the Weimar government, start printing a lot of German mark, and because Germany was not the reserve currency of the world, it was the British pound at the time. You basically had caused hyperinflation within Germany, and all of a sudden you kill the German mark because the ratio gets way too out of whack. You kill the German mark and you issue a new currency, and that's kind of been the status quo for a lot of fiat currency models over the course of the last 100 years, really, is that once it gets out of control, you don't fix the problem, you kill the problem. And that's why we absolutely have to understand currencies. Even if we don't trade it, we need to understand how it works so that we can protect it, we can diversify against it, we can invest in other currencies, we can invest in commodities, we can invest in property, because when a currency dies from either the killing of a currency, or when it dies from a reserve currency, it basically you have a massive devaluation of all savings. But property owners, they survive that. You also have people that own commodities, they survive that, and people that own other currencies, they survive those things as well. So we're going to talk about the history of the dollar, what's going on, what's led us to this history, because I think it's vital to understand the context behind the dollar and why the world is moving away from the dollar. And it's something that, even though I am a U.S. citizen, I'm an American through and through, I still understand the reasons why the rest of the world wants to move away from the dollar. I understand why the Europeans, why the British, why the Australians, why the Japanese, why the Chinese, why the Russians, why the Germans, why the IMF, why the United Nations, why the BRICS, why the Asian Institute, why the New Development Bank. I understand why they want to move away from the dollar, and quite frankly, I even understand why the U.S. is now stopping or ceasing to even stop this progress from happening and embracing something new. Now, in terms of that, I want to talk to you about what's going on right now in the world. We have the largest currency war that we've ever had in world history going on right now. And what a currency war is, it's when multiple nations purposely try to devalue their currencies to help exporting, because when you have a currency that is devalued, exporting, countries that export a lot of goods, their goods become cheap. And so how they do this is they do it through the printing process, because when you print money, you lower the value of the currency and you basically lower interest rates, which increases the supply of money in the system. And so now that there's more currency, it means the currency is devalued, and it's supposedly supposed to help economic systems increase. However, the problem with that is it only works if one country's doing it. It doesn't work if every country is printing money to lower interest rates, to encourage economic activity through low interest rates, and to encourage exporting through a devaluation of the currency versus another currency. The problem is that now most people are doing this very similar process in printing money to buy bonds of which they sell to themselves in the name of lowering interest rates and encouraging economic activity. For example, in the United States, who I find who I blame to a certain extent, not even to a certain extent, to a very, very large extent, I blame the United States Central Bank for creating this environment where every country in the world feels forced to a certain extent to print money and increase the supply of liquidity of the money in the system. The United States, since 2009, they have printed and increased the supply of money by 4.7 trillion United States dollars to basically create 250 billion in total economic growth. That is not what I call a very good model. Okay, to print 4.7 trillion to create 250 billion, because you devalue more than 250 billion, and then the cost of inflation goes up at the rate of the supply of money, which is 4.7 trillion. That is what I call an asinine model, and a model that cannot work in the long term. It certainly can help in the very short term, but it cannot help in the very, very long term. This is what we created in the United States, the currency war, and what every country in the world has been forced to do over the course of the last 6 years is they've been forced to cut interest rates. We've cut interest rates in the world by 530 different times in different nations over the course of the last, basically the last 6 years. You have currently 4 countries in the world with zero interest rate policies, which is called ZERP. You have a 5th right now that is in negative interest rate territory, the Swiss. And then you have through the printing process, you even have the Eurozone led by the ECB and the Bank of Japan through the BOJ. They have negative interest rates through the printing process. The United States, through the central bank, has printed $4.7 trillion. The ECB has printed 1.1 trillion euros, and the Bank of Japan has printed 240 trillion yen. That is a currency war where all of these entities, these massive, massive entities, are purposely trying to devalue currency to increase exporting to help their economic systems. Because the truth is, and the central banks, the truth is that the economies haven't healed from the Great Recession of 2008 and 2009. And what this has done is this has sparked, in my estimation, it sparked hyperinflation, and it will continue to spark this. And the central banks tell us, and they justify their asinine policies through basically saying they're trying to spark inflation. Well, I would like the central banks to go to the grocery store. I would like the central banks to go to the local grocery store and go buy a pound of turkey for $14 freaking dollars. Okay, that is ridiculous. I'd like them to go feed a family of 6 on a $70,000 income, and they're all having to go into massive amounts of debt because the cost of living has increased to such dramatic levels, because they're lying to us when they say we live in a deflationary environment. That is simply to justify their policies of quantitative easing. And what we're looking at, just from a national perspective, not a consumer level, it can be argued that it's even worse than that. But from a national level, you have countries like Japan that are currently 400 times their GDP ratio in debt. You have the pigs with Portugal, Italy, Spain, and Greece that are 200, 300, 350 times their GDP ratio, which is their debt burden. And in countries like the UK, you're 250 times debt to GDP ratio. In the United States, you're 233 times. Even in a very, very conservative country, one of ultra-conservative countries like Germany, from a financial perspective, they're 188 times their debt to GDP ratio. And the truth is, ladies and gentlemen, every one of these countries know that there's zero chance they can ever even pay down the debt. Most of these countries know that they can't even pay the interest on the debt. And the United States is very, very lucky because the way they pay their debt is they print money the same way the ECB does. And so when the currency systems start to change, these debt ratios, have to come home to roost to a certain extent. Right now in the world, we are $200 trillion in terms of currency in debt. Just in the last 6 years, you've increased that by 58 trillion in total global debt. Guys, you don't have that much currency in the world. If you look at the total printed money, I'm not talking about the debt, I'm not talking about the Excel spreadsheet, I'm talking about the printed money. You only have about 5 trillion United States dollars that have been printed, really, and you're in debt over $200 trillion. Most of this is through the fractional banking system and the quantitative easing programs that the central banks have been doing over the course of since 2009. And this has to change, ladies and gentlemen. This has to change because it cannot be maintained. And the world has spoken. The world has said we want something else. You know, you can sit there and talk whatever you want about Vladimir Putin from Russia. You can say whatever anything anybody in the world wants to say, but when he talks about currencies and when he talks about the currency wars that the United States started, and when he talks about diversification of the currency system, and then when he talks about the unfair advantage that the United States has in terms of currencies through the reserve system, what they're talking about is the rest of the world led by China, Russia, but even in Japan, even in Australia, even in India, in Brazil, in South Africa, in Canada, in Australia, in New Zealand, in most of the Eurozone, in Great Britain. What they're all kind of talking about and what they're kind of planning on is moving to more of a diverse currency system where the world is not solely reliant on one currency. Because when the world is solely reliant on one currency and the economic policies, the monetary policies of that currency, they're kind of a victim to whatever the U.S. wants to do from a currency perspective. And even Saudi Arabia, who has been one of the number one supporters of the United States dollar since 1973, they might even have to move away from the petrodollar starting next year because of what's happening in the world, because the world is simply saying no. That's what they're saying to the United States, is that we do not want to be the victim to the U.S. economic and foreign policy and monetary policy and currency policy and all this, because it has a direct impact on their quality of life when we print this much money. Because what happens as a reserve, ladies and gentlemen, a reserve currency is when a currency is held in reserve by a nation that is that to conduct international trade. So when Australia and China make trade agreements, they don't use the Chinese yuan and they don't use the Australian dollar. What they use is they use the United States dollar. So both of those entities sell their currency by the United States dollar and thus conduct the international trade. Now, why is that important? It is important because it allows the United States, for the last, really since 1944, but really increasingly since 1971, it has allowed the United States to export our inflation to the rest of the world. And if I lived in Australia, if I lived in China, if I lived in Japan, if I lived in Russia, if I lived in the Eurozone, if I lived in Great Britain, okay, I would not like that either, that the United States gets to export their inflation to the rest of the world, whereas when other countries print money, they have to keep it in their sovereign nation, which causes hyperinflation. That allows the United States to go out there from an from a monetary perspective and print as much money as they want. Okay, I'm not saying it's good or bad, guys. All I'm saying is, if I lived anywhere else in the world, I wouldn't like that either. And the world is speaking, and they're speaking very clearly. They're speaking through the BRICS. They're speaking through the Chinese. They're speaking through the Russians. They're speaking through the United Nations. They're speaking through the IMF. They're speaking through the Eurozone, and they're saying we want something else. And you're starting to see the death of the dollar as a reserve, not as a domestic currency, ladies and gentlemen. That's not what it's about. It's about the death as a reserve currency, and that also takes into account the euro, ladies and gentlemen, because the euro represents 25% reserve status. The dollar represents right now about 60% reserve status, and the remaining 15% reserve currencies that are conducting international trade are spread out through the rest of the major currencies. You know, the yen, the pound, the franc, Australian dollar and the Canadian dollar. So I want to talk right now about the history of the United States dollar, how it came, and because to understand where it's going, you first have to understand where we came from. Well, the United States dollar, like many forms of currency, was a created currency. It was a created currency in 1913. Now that was not the first version of the United States dollar. That was different versions along the way. The first version of the dollar was actually, and I'm talking about the paper currency, the first version of the paper currency literally dates back to the 17th century. Then you had the continental dollar in the late 17th century, where you basically had the continental dollar, which basically died. Then you had another version of the dollar, which died. The current version of the dollar is the one that was created in 1913. It was created in the same capacity that the United States Central Bank. Now, that was not the first central bank in the U.S. That was actually the third central bank in the U.S. The first two variations lasted about 20 years apiece, and that was in the late 18th, in the early 19th century, in the early 19th century, and both of those died because a lot of times the central banks don't necessarily work. And so the United States Central Bank was created in 1913. It was created to print the United States dollar. In 1944, it replaced the British pound sterling. It replaced the British pound as the currency of trade for the world, which made it the reserve currency of the world, which meant everybody had to buy the currency. Now, this was labeled the gold standard. It was labeled the gold standard because, quite frankly, it was backed by gold. And when you have a currency that's backed by gold, you are not allowed to print the money you want to print, because if you did, if you were allowed to print as much money as you possibly wanted, you couldn't do that because you couldn't then exchange it for gold. And so the gold standard was basically the United States dollar. You could exchange the dollar at $35 an ounce for gold. Now, interestingly enough, how the U.S. got the gold to create the gold standard was basically they made gold illegal. Personal gold ownership in the 1930s illegal, which means they stole all the gold from the American citizens to create the gold standard. Yes, thank you very much, United States government. In 1969, the IMF creates the SDR. The SDR stands for Special Drawing Rights. Now, most people don't understand what the SDR is. Most people have never even heard of the SDR. It's not like every day around brunch or lunch or whatever you want to call it that you sit there and talk about, well, what about the IMF SDR program? Let's have a conversation about the SDR. Most people just have never ever heard of it. And what the SDR stands for is it stands for Special Drawing Rights. What this is it's not a currency. It is a bond. Now, in terms of understanding the difference between a currency and a bond, both of them are very, very similar. So it's a shaded gray area. Printed money is debt, bonds are debt. So the IMF SDR is not a currency, it is a bond. Now, in the 1960s, in 69, 70s, and 80s, it was backed by the United States dollar, it was backed by the Japanese yen, it was backed by the British pound, and in the 1990s, late 1990s, early 2000s, it then was backed by the euro. So currently consisting of the SDR, it's backed by four currencies. You have the United States dollar, you have the euro, you have the pound sterling, and you have the Japanese yen. Now, this is a coin right here. This is a coin that is minted out of Brussels, okay? And it's the SDR coin. And what it stands for is unity in diversity, because it's a diverse currency, and it is currently, in my estimation, being converted from a currency of trade, from a currency of value, meaning a bond, to one of a currency of trade, which means it could be used in international trade. And so it's a test coin, but they're still minting it. Okay, put two and two together. Now, unity and diversity is very important because the rest of the world has spoken that they want to move to a diverse currency. And when you're looking at the marketplace right now, in the world right now, you're talking about the diverse currency systems. You got the euro. The euro is a diverse currency system. It has, what's in the European Union is it 28 member nations, 17 different currencies in the euro. That is a diverse currency system. The British pound is a diverse currency system. However, we're not going to go back to the British pound. You have the BRICS, who are creating the new development bank, or have created the new development bank. They are funding that bank, have funded that bank this year with about 100 billion in common currency. They're creating a currency of a diverse currency system through the new development bank and the Asian instituting banking system as well. And so you're starting to see pockets in the world create these diverse currency systems, and that's what the IMF is the IMF SDR is a diverse currency that the IMF chief has stated many times over the last 5 years. While the SDR is not a currency of trade, it's more of a currency of value, which is only used at the IMF level, the central banking level. It can be converted into a currency of trade, and if it's converted into a currency of trade, therefore international trade, meaning reserve status. Keep that in mind. Now, in 1973, the petrodollar begins. The petrodollar was an agreement between the United States and Saudi Arabia, which expanded to all of OPEC in 1975, basically saying this: Saudi Arabia, we're going to put a base in your country. We're going to defend you against all enemies, which basically is everybody else in the Middle East. And we will. And all you have to do is you have to price the sale of oil in dollars, which gives the dollar tremendous backing. Now, the reason we went away from the Bretton Woods Agreement is because the United States wanted to print a tremendous amount of money. And if you wanted to print a tremendous amount of money, you needed to have everybody buy the dollar so that it didn't hyperinflate here in the United States. And that's why they went to Saudi Arabia to create the petrodollar, is because every nation in the world buys oil from Saudi Arabia, which means everybody has to buy more and more dollars. Well, in terms of this, the United States didn't have the reserve system that it did in the 80s and 90s, and in 1978 through 1982, you basically have a couple things happen. This is a very important time frame in history from 78 to 82. The rest of the world in 78 said no. They said no to the United States. They said no to the United States dollar. And in doing so, the United States dollar dropped down by 50%. 50%. Gold goes up by 600% in those 4 years. Once again, in 1978, they said no because the Central Bank of the United States was printing an ungodly amount of money, and the world was like, this is ridiculous. We want to move away from it. They did in 78 to 82. The dollar devalues by 50%, gold up by 600%. 600%. But what I want to talk about is the IMF response to this. Because when the rest of the world says no to the dollar, you have what we call a liquidity problem in international trade. And so the IMF's response in 78 was very, very important. They basically said, you know what? If the rest of the world says no, we have liquidity issues. And so what we're going to do is we're going to insert 12 billion SDR into the system as a reserve. And that basically helped the liquidity problem in international trade from 78 to 82. And that's very telling in terms of the IMF. Keep that in mind. Now, in 1999, the euro was formally adopted. It was created in 92. It was formally adopted in 1999. It was created as a reserve currency. The reason it was created as a reserve currency is because it is the reserve currency of the member nations of the European Union, and so of the euro. And there's about 28 nations in there right now. There's also some African nations that use the euro as a reserve currency. The Chinese historically have also used the euro as a reserve currency as well. And in 1999, we basically saw the beginnings of the death of the dollar as a reserve currency. So in 1999, you had China and Russia make an agreement to leave the petrodollar. They made the agreement with Saddam Hussein, who didn't necessarily enjoy the United States, and so basically in 99, we move away from the petrodollar through China and Russia, and that took about 12, 13 years to kind of price into the market. Well, in 2008, the United States go to ZIRP, TARP, and QE. ZIRP is zero interest rate policies, TARP is toxic asset repurchasing program, and QE is quantitative easing, which is all very damaging to the value of the dollar. Also in 2009, you had responses to the currency problems, and things like Bitcoin were created. Bitcoin is a cryptocurrency that is an internet-backed currency that the Chicago Mercantile Exchange has recently called a commodity currency. The New York Stock Exchange, the CME, the Chicago Board of Options Exchange is formally adopting Bitcoin as there's ETFs being created traded that are tracking Bitcoin this year and next year, and it's something becoming very, very popular, not just among the niche groups out there in the world, but it's being very popular amongst the entities like Wall Street, not central banks, but Wall Street, the exchanges out there. So, you currently have about 50,000 merchants worldwide that are basically accepting Bitcoin as a form of payment. You have about $80 million transacted using Bitcoin every single day around the world. A lot of entities who send Bitcoin to foreign countries, or excuse me, a lot of individuals and entities who transfer money from one country to another, who traditionally use things like dollars, euros, yens. They use the central banking processing system. They use the banking system. They use other forms of doing this, which is track number one, which has fees number two. Now they're starting to embrace Bitcoin because to transfer money throughout the world, you can exchange your currency to Bitcoin, transfer it to anywhere in the world to the end user to convert back to dollars or euros or whatever it is, and that's becoming very, very popular for people who send money abroad in any capacity because there's no tracking of it, number one, and because it just goes on the blockchain, which is basically anonymous, and you basically so you're not tracked, number one, and you also don't have any transaction cost, number two. And honestly speaking, here in downtown Salt Lake City, you can walk a block from our mentor office in downtown Salt Lake City, Utah, and you can buy a slice of pizza using Bitcoin by just swiping your phone, the same way that you can use Alipay or Apple Pay or whatever else it is out there that you just swipe your phone. Also in 2009, the IMF starts minting the SDR as a test currency. You saw that coin just a second ago. In 2009, the IMF inserts 203 billion SDR as a reserve because once again the rest of the world said, you know what, we don't like what the U.S. is doing from a monetary perspective, and we're not going to buy the dollar, which means the dollar went down by 20%. Silver in 2009, 2010 went up 450%. Literally went up from $8 all the way up to about $48. I think you're starting to see a trend, ladies and gentlemen. In 2009, China creates their bond market called the dim sum bond market, and they begin to internationalize their currency. See, prior to 2009, the Chinese never used their currency in any form of trade agreement, and China's the number one exporter in the world. So China creates this massive bond market. They begin to internationalize the renminbi, which is otherwise known as the yuan. Now, prior to 2009, there was 0% reserve status to the Chinese currency. You had, basically, it was the 20th most utilized currency in the world. Not even the Chinese would use it in terms of trade. They would use the dollar or they would use the euro. Well, today, fast forward to 2015, 30% of all Chinese trade is directly settled in Chinese currency, the renminbi, otherwise again known as the yuan. That was 0 in 2009. Currently, 2% of all trade in the world is conducted using the Chinese renminbi. And in 2015, the RMB is the 5th largest currency in the world, and it is literally the second most utilized currency next to the United States dollar. In my short time on this earth and in my understanding of history, I have never seen a currency that has had such amazing and fast, becoming a reserve currency. When the dollar was created in 1913, it literally took from 1913 to 1944 before it became an international currency, before it became a reserve currency. You literally had 31 years of data before that happened. The Chinese are getting there in less than 10. That's what's happening right now. In less than 5-6 years, you've had just tremendous movement from the Chinese, and in doing this, ladies and gentlemen, basically the Chinese have went out to all of these different countries, and they have basically created international trade agreements called direct swap agreements to use non-U.S. dollar transactions. If you're looking at just in the last 3 years alone, you've had Japan, China, Australia, Russia, India, South Africa, Brazil, Canada, Great Britain, the Eurozone, Uruguay, Argentina, Vietnam, North Korea, Sri Lanka, Egypt, United Arab Emirates, Armenia, Iran, Belarus, Turkey, Thailand, all form trade agreements to use non-U.S. dollar transactions. Look at that list for a second, guys. when you're talking about the United States, for example, some of our longest standing political, military, and economic allies are Japan, Australia, the Eurozone, Great Britain, Canada, and all of them have signed trade agreements with China to use non-US dollar transactions because every one of those countries import goods from China, cheap produced goods in China. And China is basically saying to the rest of the world, if you want our cheap goods, and we know the Eurozone loves cheap goods. We know America loves cheap goods. We know Canada loves cheap goods. We know the Western powers, they love their cheap goods produced in horrific environments in Asia. Okay? And I hope you caught my sarcasm there. But in terms of this, China has said if you want our cheap goods, you're not going to use the dollar. You're going to use the renminbi. You're going to use some other form of currency. And even Saudi Arabia, who is our longest standing ally in the Middle East, even Saudi Arabia has said to China, we will sell you oil in non-US dollar transactions. We will sell you oil directly in Chinese renminbi. That, my friends, is what the rest of the world is doing in terms of moving away from the dollar. In 2013, the United Nations and the IMF started calling for a new global standard. They've said it more times than I can count over the last 2.5 years. In 2013, the BRICS create the new development bank to compete with the World Bank. And in terms of the new development bank, the BRICS, you have Brazil, Russia, India, China, and South Africa. They're creating a new banking system so they don't have to use the World Bank that was dominated by the dollar from 1944 on. They're using this as a form of international trade between the BRIC countries. If you add up the economic value of the BRIC countries, you basically have a larger economic system than the United States has. In 2013 through 2015, that bank is funded through common currency called the NDB. The Chinese go ahead and create the Asian Infrastructure Investment Bank to replace the World Bank. 54 nations have currently signed or ratified that trade agreement. And do you know who is not part of those trade agreements? The United States is not welcome to the party at the Asian Infrastructure Investment Bank. That is basically the IMF version for Asia, for the BRICS out there, and so on and so forth. Ladies and gentlemen, the evidence, and I have a legal background. Okay, I graduated law school in 2004. Smart enough never to take the bar though, so you can thank me for that. But in terms of this, the evidence is perfectly clear. There is no debate. Not even the United States can debate what is happening right now. The world will move away from the dollar, and it will be replaced with something else. The world will have a new reserve currency by 2025. And the reason it's not this year, despite all these trade agreements, despite the rest of the world saying no, the reason it's not this year, ladies and gentlemen, is there is trillions and trillions of United States dollars that has been printed since 1971 in the rest of the world. And the rest of the world is not just going to burn their dollars, ladies and gentlemen. They're going to use it to purchase goods and services by the only entities that will accept the dollar, and that is the United States. Which means the inflation that we have been printing for the last 44 years, the inflation that we have exported to the rest of the world to keep our 2% inflation here in the United States has to come home. Okay? That has to come home. This is the death of savings. This is the death of currency. This is, and I do not believe the dollar goes away, ladies and gentlemen. That's not what I believe. I believe the dollar will always be a form of currency as a domestic currency. I am talking a reserve currency. But you will see hyperinflation in the United States. You will see in the United States what 100 other countries have had to go through doing the same things, printing money, but unfortunately for them, it stayed home. And it has to happen here as well. So, in terms of the United States, how important is it for everybody to understand currencies? given that we are going through a historical shift, a massive historical shift in currencies, a historical shift in terms of the reserve system, a historical shift. And by the way, this impacts the euro, this impacts the British pound, this impacts the yen, this impacts the Aussie dollar, the Canadian dollar, and the Swiss franc as well. So the question I have for everybody out there is this: what is it going to be? Think about it for a second. If the dollar goes away as a reserve, doesn't something have to replace it? If the euro goes away as a reserve, doesn't something has to replace it? Because we've been doing international trade for 4,000 years, ladies and gentlemen. You've had a reserve system since the ancient Greek times when they used Greek coins in the Mediterranean. The Romans was the reserve at one point. The Florentino out of Florence, Italy, was the reserve out of the Medici. You had the British pound as a reserve. You had the Spanish dollars as a reserve. You had the Netherlands as a reserve. So I'm going to give you guys 30 seconds, and I'm going to have everybody tell me what that next reserve is in your opinion. Is the euro going to overcome it? Is the Chinese renminbi going to be the next reserve? Is what the new development bank is doing through the BRICS, is that going to be the next reserve? Is the IMF through the SDR program, is that going to be the next reserve? It could be the euro, it could be the renminbi, it could be the BRICS through the new development bank, it could be the SDR. Those are really kind of your next leading candidates, and Bitcoin, it's definitely not going to be Bitcoin. Okay, I certainly think Bitcoin has a role in our society. I certainly think Bitcoin is going to increase in popularity. It's right now in a niche fringe stage, I would say, but at the same time, you're looking at some tremendous movement around Bitcoin in the foreseeable future, and you're now starting to see consumers start to accept Bitcoin. Tim likes to say, and I love how he says this. Whenever something new is created, you basically have 2% of society embrace it. That's the radical fringe groups, right? That's the radical fringe that adopts these things and so on and so forth. And then after that happens, then you have about 16 to 20% of people start to formally adopt it, and then you have 65% of society adopt it, and then you have 10-15% that will never do anything in any capacity. For example, think about when we bought things online in the 1990s. Very few people would actually trust buying something online in the 1990s because they might steal your data, they might steal your information, they might steal your identity. Everybody was really, really, really scared of it. But then as people became more familiar with it, more people started adopting it. Now a massive majority of people, buy things online all the time. Same thing with kind of Bitcoin right now. And I would say right now with Bitcoin, you're in that, you're past the radical fringe stage, that 2% of society embracing it. You're now in that 15 to 20% stage where people are now starting to adopt it, and more people throughout society are adopting it as well. But I do not believe it is the next reserve status. But let's talk about for a second. First and foremost, Bitcoin is very easy to use. It's as easy as using Apple Pay, Alipay, swiping your phone to board an airplane, or I don't even know if you guys have ever went to Starbucks and swiped your phone to buy a Starbucks cup of coffee, but it's that easy to use. You got about 82,000 merchants worldwide that are currently using it. It's very cheap from a transaction cost. There's no merchant fees, unlike when you use a currency. It's open source, which is very important in today's information technology area, and investors are now starting to adopt it in terms of using Bitcoin as a form of protecting against currency risk. Traders are now starting to embrace Bitcoin, but I do not see it as a form of reserve. What about the euro? Currently, it's the second largest reserve currency in the world. It has 25%. It has 25% reserve status currently. The economy is extremely large, very liquid. Their bond market, which is important for a reserve currency, their bond market is absolutely absolutely massive, only second to the United States and the IMF. However, I don't see it being the euro. There's too much internal conflict right now. They can't agree on anything in terms of monetary policy. You got a massive debt problem in Europe right now with the southern European states. And the simple reality is Germany. I'm not saying it's going to happen because I don't think it will. But if Germany left the eurozone, if they left the euro and went back to the German mark or adopted something else, basically there is no euro. There is no euro without Germany, without the largest economy in the European Union. And so I don't see that being, and also it's not just that they disagree on monetary policy. It's not just the debt problem. It's the problem they disagree politically on, foreign policy. For example, there's massive disagreements right now with the refugee problem in Europe. There's massive disagreements in terms of the response, the European response to Ukraine over the last couple of years. There's massive disagreements in terms of monetary policy and through quantitative easing through the ECB. So I definitely don't see it being the euro as the next reserve. The Chinese renminbi. We've talked about the growth of the Chinese renminbi over the course of the last 5-6 years. It's been absolutely amazingly impressive looking from afar. But the renminbi right now, guys, it still has a soft peg to the dollar. You can't have a soft peg to the dollar and be the next reserve currency, although that is going away right now. The renminbi is not formally as accepted as a reserve, despite the fact that it's 2% reserve in the rest of the world. That is changing starting next year as well through their negotiations with the IMF. But here's why I personally do not see the RMB replacing the dollar is I'm not sure China wants it to replace the dollar. I mean, the more I've thought about it, the more I think about this. Chinese economy is largely dependent on exporting of goods, largely dependent on exporting of goods. And if the rest of the world has to buy your currency in droves, that's going to give it a little bit of a backing. And basically what happens is the value will go up. But it really depends on how much they print. Well, in terms of doing this, if the currency goes up, what's going to happen to exporting of Chinese goods? That's going to go down, which is going to have a severe impact on the Chinese currency and the Chinese exporting of goods. I think the Chinese simply do not want the dollar to be the reserve currency, and I think the Chinese are really working not within just themselves in terms of putting the RMB in a reserve status. They're working within the IMF. They're working within the Asian Infrastructure Investment Bank. They're working within the NDB, the New Development Bank, to use other forms of currencies that are diversified currencies as a reserve. Plus, their bond market is still extremely liquid. There's a lack of transparency in their economic reporting system. I've always kind of put it like this. I don't trust U.S. economic reports. There's not a damn chance I'm going to trust a Chinese economic report. Okay, and also, the value of the yuan right now is politically determined to a certain extent. In my estimation, for the rest of the world to to adopt the Chinese RMB, you would have to have massive reforms, political, financial, legal, constitutional, for the rest of the world to adopt that. And I just don't see that in the short term. So then you kind of have the BRICS. You have Brazil, Russia, India, China, South Africa. In 2011, they make trade agreements to use non-U.S. dollar transactions. In 2013, they call for a new currency. In 2013, they announced the New Development Bank, which is to compete with the World Bank. In 2014, the bank was established. In 2015, the bank was funded as a reserve to use as international trade between the countries of Brazil, Russia, India, China, and South Africa. But I also don't see it being that. That certainly could be, though, guys. The NDB, I'll tell you the legit contenders, okay? The legit contenders for the next currency of the world, you have, the euro is not a legit contender, okay? That is a fringe contender. I don't see that happening, not for 1 second. The legit contenders, you have the Chinese renminbi. That's what you have. You have the yuan. Okay, the Chinese yuan, that's a contender. You have the BRICS through the NDB. That is a legit contender. And then you have the SDR, the IMF SDR. Now, the SDR is, in my estimation, the leader in the clubhouse. Okay, the SDR is the leader in the clubhouse in terms of the next reserve status of the world. You have basically, and it's in my estimation, it is basically lapped the field to a certain extent. The SDR currently consists of four currencies. You have US dollars, you have British pound, you have Japanese yen, and you have the euro. The Chinese yuan, through the negotiations with the IMF, will include the Chinese currency within the next year in the valuation of the SDR, officially making it a reserve currency number one and a major currency number two. What the IMF, led by the United States, because the United States is the number one voting bloc of the IMF, what the IMF through the United States and Japan and the US are tied to this, what they told the Chinese is that if you were going to include the yuan, you have to take the peg away from the dollar. And that's why about 2 months ago, the Chinese made the determination to begin to remove the soft peg to the dollar, which means they now, at the end of the day in China, they basically will determine the valuation of the domestic currency with the valuation of the international currency. They are attempting to remove the soft peg. I do believe that's going to include that in 2016. Currently, the IMF SDR is only used by G7 countries' central banking systems. That is being modified and changed. The IMF just in the last few years has used the SDR as a form of reserve by putting forth 203 billion SDR in circulation for international trading purposes in 2009. When they bailed out Ukraine just a couple years back, they put 20 billion of SDR. They didn't use the dollar in that capacity. They used the SDR, and basically they're using the SDR in many capacities, and they are in the process of converting the SDR to a currency of trade from a currency of value. They're also continuing to mint the SDR out of Brussels in preparation for it being used as a form of commonality in international trade. It is a diverse currency because it's going to have 5 different currencies in there. You also had the IMF talk about the potential of utilizing gold or silver within the valuation of the SDR, and that comes straight out of China through the negotiations, because the Chinese want a commodity-backed currency system and not just a free-floating currency, because let's face reality, ladies and gentlemen, I'm going to say what nobody likes to say. Fiat currencies suck. They're the worst system out there. It gives the rich more money and the poor feel poorer. It's the death of the middle class, and it's time to get away from them and get back to some of our roots back here and get back to more commodity-backed system. Russia, the BRICS, the United Nations, the IMF are just a portion of the fraction of the people that support this. And I am going to tell you guys right now, right here, that the United States is backing the SDR as the next reserve, because if you're looking at the United States, okay, and you're seeing the horizon, you're in this plane hovering 64,000 feet in the air, and you see everything out there, you know one thing for certain: the rest of the world doesn't want your dollar. That is obvious. That is evident. It is happening. And so you're looking at the Eurozone. You're saying, well, we're not going to back the euro. You're looking at the IMF, you're looking at the BRICS, you're looking at the Chinese, you're looking at the New Development Bank, you're looking at the Asian Infrastructure Investment Bank, you're looking at all these situations happening in the pockets, the pools of the rest of the world, and you're saying the best path for America, the softest landing for America, the softest landing for the dollar is to go to a diverse currency system that has the United States dollar already in it, and that is the SDR. So my evidence, my truth, ladies and gentlemen, is that the SDR will be converted into a currency of trade within the next 10 years. I do believe that there are certain levels of the United States government that already support it. I do believe that the central bank understands it, and that's why I believe that the rest of the world has lost their damn minds through the printing of money and lowering of interest rates is because they know at the end of the day they're kicking the can down the road and the reserve is going to lose its reserve status regardless. And ladies and gentlemen, in my estimation, this is one of your biggest opportunities that you will ever have in your entire lifetime. It might be perceived as a negative, okay? But at the end of the day, and you know what, guys? Some people in the United States might say, well, how in the world can a U.S. citizen say these things about the United States Central Bank and so on and so forth? My role as a trader, as an investor, as an entrepreneur, and as an educator to people around this world is not to preach the propaganda out there. My role is to tell you the truth and to give you the facts and let you make decisions for yourself. And to me, the United States dollar will not be the reserve currency in 10 years. The dollar will lose between 70 and 80% of the value. You will see inflation that spikes to record levels in the United States, and I am excited as an entrepreneur for that, not as an American consumer, guys, not as a guy who bleeds red, white, and blue. That's not what I'm talking about. That is different. I am talking about the facts of money, or as Michael says, the truth of money, and it represents an opportunity. It represents an opportunity for every single one of us to learn how to trade currency, to learn how to protect currency, to get out there and diversify our currency so that we can put ourselves in a better position, so that we can put our families in a better position. Because at the end of the day, ladies and gentlemen, I am the CEO of my family. That is who I am. And as the CEO of my family, it is my responsibility to, in every capacity, good, bad, ugly, positive, negative, in every capacity, take care of my children, take care of my wife, put them in a better position, to teach them, to give back to them, to, as an American citizen, to give people an opportunity to do the same, to help other people out, to serve other people, because I absolutely believe in service.
Everybody knows money talks, but what they don't know is just how sexy it sounds when it does. Tackle Trading's Forex report will really turn you on.